Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, August 31st, 5:14 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we have been in an uptrend since Tuesday's O'Neill follow-through day. Check the trend gauge over here. We've got market leadership flashing bullish. And we also, in every video, review the five major indexes across the three time frames that we use to gauge our exposure to the market. The short-term 21-day moving average, all five of the major indexes are below there. Sorry, above there. Medium term, got a mixed bag versus the 50-day moving average as indexes try to recover from the recent pullback. Long term, all five are above the 200-day moving average and have been for quite a while. And this is a very key level for us. The market never gets into serious trouble unless the indexes break below their 200-day moving average. In fact, all bear markets occur with the long-term 200-day moving average or 10-week moving average. If they break below there, they all happen below that level. So if people tell you can't time the market, tell them just keep an eye on the 200-day moving average, or the 40-week moving average is the equivalent of the 200-day. If the market's below there, it's risky. Otherwise, it's not. That's from a broad sense, of course. There are on a sector by sector basis. That's a different story. So what happened today? Well, August has been lived down to its billing as one of the weakest months of the year, and we finally got a close on that today with a tight, low volume consolidation. In fact, lowest volume of the year for any full day. The only day that was less was the half day on July 3rd. So glad to see August come to a close. Glad to see it with a tight, low volume consolidation after 4 up days, including a follow-through day. You never want to get too overbought because then you're setting yourself up for a rubber band stretch snap back to the downside. The RG8, this is our 8 growth ETF composite, up 0.1%. S&P 500 sold off into the close. In the last 5 minutes, it was slightly positive. Now down 0.16% to close August. NASDAQ 100 up 0.3%, Dow down 0.48%, mid caps up just slightly, ever so slightly. Russell 2000 down 0.19, Global 60/40 stock and bond down 0.05, bonds strong, global stocks weak, in-house GROTECTION down 0.16%. We'll hit the tail of the tape in charts of interest. Let's get into it. Here's the S&P 500. So after 4 days up, we were flirting with a 5th day up, sold off into the close. Tight range, as you can see from the chart here. So you can see a small up open plus 0.15%, just really tight action. Bit of a midday attempt at a sell-off, quickly recovered. Another attempt at a sell-off, and then liquidation into the close between 45.08 and 45.32. So 24 points on the day, just slightly over 0.5%. Very tight action, tight low volume. Typical summer doldrums, I guess we could say. NASDAQ 100 continues to fly higher and lead, as you can see by the moving average, but the relative strength line over the last 2 weeks. 5th day up, closing positive. It leads up, it leads down, and right now it's leading up. Let's go to the Dow Jones Industrial Average. Continued relative weakness and opened higher, but a negative reversal. CRM initially gapping up, still ended up positive on the day by about 3%, but not enough to overcome some of the weaker high price stocks in the Dow. So the Dow pulled back right to its 21-day and 50-day moving average. MDY mid caps sitting right on their 50-day moving average above the 21. Small caps tried to get above the 50-day moving average stay, and that's a key level. There's a anchored volume weighted average price that's right around this 190 area, anchored from the all-time highs on IWM. This is not something we discuss in the videos, but it's something that we have on toss, and we tried to poke our head above it, but failed back below the 50-day moving average for small caps. So really that 190 level that I have set right here, we're going to want to get back above there. Let's flip to the VIX. Mixed bag on the day, but mostly down for the indexes. But the VIX made a lower low below 15, below the 21 day, into that healthy area. This signals contracting volatility, um, down even though the markets were down. Getting into the oversold territory is the VIX. Let's go to the dollar. Dollar up 0.5% today, gapped up and pretty much held tight. So bouncing off the 21-day moving average. Strong dollar. Uh, guess what metals did? Precious metals, gold, barely down. So not really bad a performance by gold, with the dollar being up over 0.5% as it's consolidating after a nice couple of week move up off the volume, back above the 50-day and the 21-day moving average. GDX gold stocks down 0.88%, 2-day pullback after running into the declining 50-day moving average. Hi-ho silver down 0.8, pulling back to this breakout level from this little 4-day shelf that it formed after its gap up last week. Bitcoin and Bitcoin stocks were weak all day today. Big move up 2 days ago on the ETF announcement. SEC said they were delaying the decision on Fidelity Spot Gold ETF today. That breakout failed, ran right into the 200-day moving average, back into the tight range where it's forming, or well, it's trying to put in a floor. If it does, it does. If it doesn't, well, we're not involved in it because we only diversify into things like this if they're far outperforming domestic stocks. Let's flip over to bonds. BND. Bond prices up today across the board, meaning bond yields down, not significantly. Here's the broad bond index up 0.17%. TLT, the long bond, up 0.45%. As prices continue to bounce off of their recent lows, that means yields are pulling back from their recent highs. You can see that again, 3 closes below the 21 now. On the 30-year yield, the 10-year yield, TNX, continues 3 closes below its 21-day also. So pulling back, this is good news for growth stocks. That's the inner asset correlation that we hit every day. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. PCE inflation data before the open was in line with expectations, so no surprises there. That initially spiked the market for the positive open, but as I said, we gave that back during the day. But after 4 days up, we're now up 4 of the last 5 days. 4 days above the 80 EMA, 3 days above the 21 EMA. Remember when this was in the high 40s above the 21 EMA? That's what a strong rally looks like. Expectations, well, we're back above the 21, so they're positive. We got a mixed bag today. 45.08, down a little bit on the S&P 500, higher high on the NASDAQ 100. Let's see, software continues to outperform. We noticed this in our weekend sector work. We had outperformance by IGV, that's the big cap software ETF, CLOU, that's cloud software, and CIBR, that's security software. That was led by a nice earnings report by CrowdStrike. We'll take a look at that chart here in a minute. Regional banks outperformed as well. On the downside, XLI, industrials, staples, utilities, healthcare, and real estate, gold and silver stocks, and emerging markets. Here's the focus list that we're going to cover today for various reasons. In-house, the only thing we did was add to our NRGU position. Bottom line for the day and for the month, constructive, low volume, tight consolidation caps the negative August. We'll take a look at the monthly charts very quickly on the 5 major indexes. So here's the S&P monthly chart. Consolidating after the breakout, which you can see broke above here, this 41.5860-ish level, This is considered a support month because we closed in the upper half of the monthly range. So there's the S&P 500 down 1.8% on the month. The Qs down 1.5%, closing at their highs of the month. Good stuff there. The Dow down 2.4% inside month. Small caps, MDY down 3%, basically an inside month there. Also, IWM small caps down 5.1%, but holding that green line there. That's a 50-month moving average. We found this to be significant when we look at uh, long-term support and or resistance for the major indexes, particularly the S&P 500. You can see the bounce back here in 2016, undercut reclaim here in 2020, held on the pullback last year. So those are the monthly charts. Let's go to individual names, back to the daily, and we'll talk about what we own in-house. And basically 3 names is what we own, and then a big position in the S&P 500. The big position in the S&P 500 allows us to concentrate on just the best of the best stocks and not buy any second tier nonsense. Nvidia, not second tier nonsense. Very tight inside day. If this blasts above this 150 level, we'll be adding to our position. Tesla, uh, 2 days, right around 3 days, right around its tight 50-day moving average, poked above 260 in the last 10 minutes, but pulled back after that. This looks like it wants to go higher also. Note the relative strength over the last 2 weeks. And then our most recent addition back to the portfolio, Uber, continues to outperform 4 very strong days after getting stopped last Friday. We got back into it earlier this week. So that's looking good. And then NRGU, this is 10 big cap oil names. We got several alerts to the upside on this today. This looks like it wants to go higher also. Pulled back to the 21 twice over the last 3 days and made higher highs today. Look at the the stochastic hookup near oversold. And this thing really moves when it gets going. So now some other stocks. Let's start off with some earnings stocks last night that initially gapped up. Pure Storage gapped up and had a very hard negative reversal, but ended up finishing positive. Look at this on a 5-minute chart. You just never know what you're going to get out of the gate with especially tech stocks that report earnings. By all intents and purposes, this was bid higher overnight and into this morning, not after the open. Some people really wanted to head for the exits. There was a waterfall and then it recovered. So consider that anybody that wanted to get out of Pure Storage got out today with a move like that. Uh, Next up, a stock that was just getting back on the radar. Palantir back above its key moving averages yesterday, a scathing downgrade by, I believe it was Morgan Stanley. Look at the big red bars on the selling on this. Anytime this starts to get some strength, there's big volume selling and it closing at the lows of the day. So this is not a stock that can be trusted right now. Stocks that can be trusted, we talked about security stocks. Here's IGV making a higher high, forming a nice cup base. That's big cap software primarily. CLOU, cloud stocks, really nice day today. Really nice bounce off the bottom over the last 2.5 weeks. And cybersecurity, CIBR, almost at recent highs. One of the reasons for that was because CrowdStrike on 319% of average volume was up 9% today on its earnings. Another security stock, OKTA, up 13.5% on its earnings. So that really helped out the cybersecurity names today. A big cap software stock, Salesforce gapped up, gave up a lot of it, but still finished up 3% on the day. And then a partnership was announced between Shopify and Amazon, and both stocks reacted positively to it. Here, Shopify up almost 11% on 171% average volume as it tries to complete the right side of a base. Amazon responded well to the partnership, also up 2.2%, kind of popping out of this consolidation off the 21-day moving average. And then a tale of two divergent results from low price retailers. Ollie up 3%, although well off the highs after it gapped up on earnings. On the other hand, Dollar General down 12%, although it closed at the top of the range. It was down over 16% at one time. So that's gonna wrap it, and that'll wrap up August. As always, love to hear from you. The email's don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, contact my partner Dan Stewart, dan@revereasset.com. And let's see what we get in September. A lot of big range of outcomes in September on the market, and then the fourth quarter is historically bullish, but that's history. There's no guarantee of anything. Remember, it's not how much you make in the market, it's how much of that you can keep. Since the follow through day, we're back into accumulation mode, putting client money to work with the move back above the 21 and the 50-day moving averages and the follow through day. Leadership stocks acting pretty well. And with that, I will wrap up the video for the month of August, 8/31. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.